Global markets have been volatile on the back of Russia-Ukraine war, gradual withdrawal of liquidity by central banks, and going up of interest rates to control inflation, which is at all-time highs in many economies. This volatility has led to a risk-off mood of the investors, and equity market has been witnessing significant volatility around the world. India is no exception. Indian market, in fact, is very closely correlated with US markets, and this leads to significant volatility based on US market movements. Domestic inflation and domestic interest rates also have been going up, and the expectation is that in the forthcoming credit policy, which announcements will come on next week, probably interest rates will go up once again. While that is to a great extent factored in, multiple other headwinds, predominantly the going up of crude oil prices, is creating significant cost push for corporates, and probably this will lead to their margins getting significantly affected in the current quarter. The apprehension around that is building up, and that's showing up in the stock prices across the board. The silver lining remains the prediction of a good monsoon, well spread out monsoon, and this has led to some traction coming back in domestic monsoon related stocks, and also some stocks which will benefit if consumption, particularly rural consumption, goes up. Under these circumstances, we believe that for domestic investors, it may be a good time to take the opportunity of the about 15% price correction which we have seen from the top, and take this opportunity to accumulate good quality stocks for long-term portfolio. We like the FMCG major Hindustan Unilever at current levels. We believe a target of 2,500 for 6 to 12 months is probably in order. Rural consumption increase on the back of good monsoon will definitely help companies like HUL. We also like Dabur, which has a rural focused portfolio as well as fantastic distribution network in rural India. We also like some of the defense plays. This is on the back of geopolitical developments and the need for defense manufacturing becoming centralized in domestic markets. So we like Bharat Electronics, we like Mazagon Dock, we like Bharat Dynamics. These are companies which have got full order book, well managed companies, strong balance sheet, and I think they should do well in the coming financial year. We also like some of the IT companies. In spite of negative commentary and the volatility, we believe that Indian leading IT companies are in for a good time in the medium to long term. HCL Tech on a peer comparison basis seems attractive. Auto performance in last quarter has been commendable. They were probably the best performing sectors in terms of earnings beating estimates. In this sector, we like M&M. Again, on the back of the rural consumption story, the tractor sales in April and May has been beyond expectations, and they have been all-time best numbers. So Mahindra & Mahindra definitely remains our favorite amongst the auto companies. This stock can be picked up with a target of 1200 for a 1-year hold. Thank you.